So I'm gonna start with this. So welcome. This is crypto and assets on a Saturday every single week. Just so you guys know, these are calls that we're going to be running at the same time every single week to bring a lot of information, but also give you guys the roadmaps or terminologies or even Q&As. Right? We're going to formulate different things on a week to week basis, and our mission here, like I said before, is to not let your weekend be your weekend. And this is the time to really get ahead. But in the chat box, let me know real quick. What is something everybody's grateful for, right? Is it maybe health, life? I'm over here drinking some cranberry and some pineapple because I was going through it yesterday. But I'm grateful now to be healthy, right? Community knowledge, health. Yeah, for real. I feel you, Jojo. Yeah, I'm grateful for Powerhouse for sure. The familia. Okay, amazing, amazing, amazing. We always want to start with that because gratitude is very, very key, right? When you start your day with gratitude, then you're grateful for the day and you're ready to get things going. But with saying that, we're gonna kind of get things going. But like I said, I'm not the only one doing these calls. It's gonna be with my brother John Luke. We've been able to work together, guys, for so many years. And one thing that we really came together with heavy is the love of crypto. Believe it or not, John Luke is an individual that because of the education, because of the community that we have access to, he opened doors for him even for his job. And he knew more than the average person in crypto. And it came down from being educated on calls like this and really being able to set the example that, hey, once you get information more than the average person, it opens different doors. So I'm here to let you guys know that this information you guys are going to be getting on the weekends, on Saturday, is not just something you're going to, yes, take and apply for yourself, but it's also something that's going to make you different and a little bit more knowledgeable than average person, and also how to scale in this and really have a strong foundation, because the foundation is the most key thing. But John Luke is somebody that I would say is the best example when it comes to educating himself, but also being able to take action on a lot of the things that he's been able to learn. And that's why we decided to come together. This is the first time we're actually doing a crypto call on a week to week basis together. And I'm super grateful because it's been a year time coming. We both have a lot of experience and we're also still learning and growing and developing. And our mission is to be able to give you guys everything that we have and more as the weeks go by. So, John Luke, brother, I'll have you come on here real quick. To start things out. I'll show the PowerPoint as well. But yeah, brother, go ahead and I'll let you take it away.
Yeah, appreciate you, bro. Thank you very much for introducing this call. I'm so excited to be here, guys. This is the start of something great. Gil is somebody who has been in the crypto space now for 4+ years. So he's been an investor, he's been a trader, he's helped other people with that skill as well. And so, you're listening to two individuals who not just talk the talk, but are actually walking the walk on a regular basis, which is key. And so as we dive into this, I want you guys to understand that this is going to be really the foundations. Every single week, you guys are going to get a different segment within crypto, but from the foundational element, because there's a lot of things that people miss out with the basics. So we might start a little bit simple, but as the weeks go on, it will get a bit more intermediate and then a bit more advanced so that everybody can take a nugget of gold from one of these calls. So let's dive into the first slide, really with crypto and assets. And so on this particular call, we really want to dive into the exchanges and wallets in particular. That's going to be the main subject. But let me just give you a quick background of what crypto is, guys. It's simply digital money attached to blockchain technology, and it's seen as like an upgrade to the internet. And so with crypto, what makes it unique fundamentally? It's the tech behind it. It's the fact that it runs on a peer-to-peer system. All that means, in simple terms, is that if I am sending Bitcoin or Ethereum or Polkadot, whatever the crypto is, to Gil, that transaction cannot be altered or changed between me and Gil. There's no central bank, Federal Reserve, there's no middleman within that transaction. And so that's what makes crypto very, very unique. And there's a lot of pros and a couple of cons to that as well. But I just want to give you a basis. So let's move on to the next slide. There's various types of cryptos. They're not all the same. We understand that there's over 18,000 of them out there, but they all have different utilities. They all have different purposes. And so what you have is you have what we call layer 1, layer 2, and layer 3. So let's think of it this way. Bitcoin is almost like the App Store. Ethereum is almost like Google Play for Android. We know the App Store is for Apple and Google Play is for Android. Well, here's the thing, on the Bitcoin blockchain, which is the way that Bitcoin functions, it might be faster, it might be more expensive, it might be slower. There's different variations between Bitcoin's blockchain and Ethereum's blockchain. But with Bitcoin, there's hundreds, there's thousands of tokens running on the Bitcoin blockchain. And so with the App Store, there's also thousands of apps running through the App Store. Well, guess what? That's the analogy that I want you to keep in mind. Ethereum has many, many, many tokens, many projects running on the Ethereum blockchain, just like there's many apps on Google Play. But we know that the App Store, Bitcoin, and Ethereum, Google Play, they don't run simultaneously. They don't run together. They interconnect. I mean, if I have an app on Google Play, can I take that app and go into my App Store on my iPhone and use the same app? I can't. Why? Because it's two different blockchains, two different systems. So I want you to keep that in mind. Gil, maybe you want to touch on stablecoins and also what Chainlink does as well.
For sure, for sure. Now, put it one in the chat. This is kind of like giving you some good foundation with it. Again, a lot of it might be something you already know, but this is super important because when it comes to understanding the different types of cryptos, it's kind of like John Lucas saying, right? Ethereum and for example, Ethereum and Solana, right? They're two different blockchains. And the one thing I always like to say is that when you talk about different, cryptocurrencies, and different things, they're just a currency in the blockchain. That's really the best way to kind of explain that. So, like he was saying, Ethereum is literally like the App Store. Now we have things like stable coins. Now, put a 5 in the chat if you've heard of a stablecoin and you're familiar with a stablecoin. Maybe put a 4 in the chat if you're not familiar with a stablecoin. Right? A stablecoin is very simple. It's literally pegged to a dollar, right? So it's like think about it being dollars, but in crypto. And the whole point of a stablecoin is so that you can actually, just hold what we call quote unquote dollars in the blockchain, and is also something that you can use to exit or to enter. A lot of people think is, oh, when I exit Bitcoin and I exit my profits, I'm hitting it straight to my bank account. But one thing that we talk about is not really, is you really want to keep it in the blockchain. And what you can do is transfer from your Ethereum to your stablecoin. And now whatever you have and you transfer, it's now pegged to a dollar. Now it stays. It's a way of holding asset without you having exposure in a certain crypto that might not be in a bullish run or you already want to take profit from. Now, that's something that's going to be a lot more used as well, guys. In the US, I highly believe, in my opinion, USDC stablecoins is what we're going to be using on a day-to-day basis. And honestly, we're probably not even going to realize it. It's going to get to the point where the dollars in our bank account is what we're going to be using at the bank, literally to buy at Starbucks. And you won't even know because it's just going to happen in the back end. And that's why stablecoins right now, more than ever, are being pushed and prioritized because they understand that stablecoin is what opens the horizon in crypto, right? So that's kind of the biggest things when it comes to the different types of cryptos that exist, and we'll talk about a little bit more at the end. Now, I do want to talk about a little bit as well challenges of cryptocurrency. We also want to talk about the good, but we also want to talk about maybe the challenges that it has, right? There's 4 key ones here. Number one is volatility. We know that crypto is very volatile, right? Literally, and we'll show the charts at the end, but right now, Bitcoin is at 103,000. At the beginning of April, guys, we were at 75K. That's wild. Like, that is literally around a 38% increase in a month. That's not normal. Now, the reason why there's volatility is because it's really only a $3 trillion market cap, market. So only $3 trillion are in the market, guys. To give you guys perspective, there's around 40 trillion in the stock market. So it's less than a tenth of the size. And that's why prices can change. But the more money that comes into the market, the less volatile it will actually become. So it's very, very key to understand. Number 2 is regulatory concerns. Obviously, we don't have any clear regulation yet, but it's coming. And I also want to let you guys know that regulation is a good thing. A lot of people are like, well, I don't know. We need regulation for crypto in general to become massively adopted. We have to have that regulation in place that is coming sooner than we think. And that's going to be something that's going to really bring a lot of horizons in what we're doing. And then also security risk, right? When it comes to crypto, when you actually own crypto, which we're going to be talking about that as well, when you own it, it's up to you, right? There's a lot of security things, because it's a digital asset, it can easily be taken or you click the wrong link, right? But there is ways that we can basically protect ourselves when we actually come in and own it, right? And that's something that we'll talk about that as well. And then also adoption barriers. There's a lot of reasons why there's adoption that hasn't gone to the maximum. I think adoption, to be honest, is not at its maximum at all. And it really just comes down to there's a lot of different barriers that we have to go through, right? People don't understand crypto. It's something new. People don't know how to use it on a daily basis. Not being used on a day to day on every single lives, but it is something that is continuing going to grow because if you think about it, it's only since 2008. It's not that long. So imagine when it's in the game for 30, 40, 50 years and it's being used on a day-to-day basis, that's when adoption is going to scale to that next level. And at the same time, is for the individuals that are in it now, you're going to be 10 times ahead of the average person. All right. So I'm going to have John Luke on here if he wants to touch on anything with challenges of crypto. But this is very, very, very key.
Yeah, and a couple of things here. With it, when it comes to volatility, like Gil mentioned, the stock market being $40 trillion market and crypto not even being $3 trillion. It's interesting how the stock market is a lot larger in size, but in terms of trading volume, in terms of daily trading volume, $22 billion is typically traded in the stock market, but $1 trillion is traded in crypto on a regular basis. So the volume is different. What does that mean? That means that a lot of people, a lot of institutions want to capitalize off the volatility, even though it's a much smaller market. When it comes to the security risk within crypto, there's differences compared to that with the traditional financial system that we live in. I mean, if you're trading or investing in stocks, you don't have to necessarily think about, what Wi-Fi am I using? Public Wi-Fi or private? Or, if I send money or if I buy this asset and I make a mistake, can I get it back? I mean, those things can be resolved, but in crypto, it's complete ownership, which means you're accountable for every decision you make, whether it's the right one or the wrong one. And those are considerations you have to think about in the traditional system. Regarding adoption barriers, there's many, many, many pros to crypto right now with that. You have the fact that Trump's in power, that the Republican Party are pro-crypto. You have the fact that it's illegal tender in certain South American countries. You have the fact that some banks are even utilizing cryptocurrency to this day. And so those are positive things, but there are challenges as well because there's a long way to go before the majority of people and institutions are actually invested in utilizing the technology. So exchanges. There's many different crypto exchanges out there. Now, you're probably thinking, number one, what is an exchange? And if you know that, then we're going to give some more info as well. But an exchange is simply a place where you can buy and sell crypto. It's very simple. It's different than a wallet. A wallet is somewhere where you can hold, you can store crypto. But not all exchanges are wallets and not all wallets are exchanges. So we're going to dive into that a little bit. Coinbase is probably one of the largest exchanges out there that most people use, especially over here in America. Now, it's user-friendly and it's something that we typically recommend for people who are maybe new to the space. The one thing to consider is that there are states that actually ban Coinbase where you can't even use it, In New York, I know that certain individuals have trouble using Coinbase, so they use a VPN. When it comes to Kraken, this is something that is my personal favorite. Why? Because the CEO of Kraken is actually so pro crypto that he has made suggestions that people store their money, not just in Kraken or Coinbase in a centralized exchange connected to the Federal Reserve, but so actually people store it in what we call a ledger or a trezor, which is the safe haven. It's a hardware physical wallet that protects your crypto much better than any exchange. And we're going to touch on that later on. But Kraken has services such as staking. Now, what is staking? Well, let's think about stocks. In stocks, in Apple, Amazon, Tesla, certain blue chips out there, you get dividends every year just for holding that stock, just for having ownership of it, having shares in it. Shares in stocks is the same thing as having tokens within crypto. And so that dividends is typically 4%, 3%, 5% a year. So if you have 100 grand in Amazon or Apple or something, you might end up getting 3, 4K at the end of the year in dividends. That's amazing. But in crypto, it's the same function, but it's called staking. You get tokens on top of your investment as a bonus, as a hey, thank you for holding our project. Thank you for holding our crypto. And you can get that every month or every single year. So there's a project on Kraken called Kusama, which is basically a layer two to Polkadot. It's basically a smaller crypto version in Polkadot. And so every month, I get around 12 to 15% on top of my investment already. So let's just do some basic maths here. If I have 100 100 Kusama tokens, right? And the price of Kusama goes up from 100 to 200. Well, it doubles. On top of my investment doubling, I also get 12 to 15% on top of that double. But if the market goes the other way and Kusama goes down from $100 to $50, I still get 12 to 15% on top of my investment, even though the price halved in value. So staking is an incredible way to get money on top of your investment already. We also have KuCoin, which is very, very popular over there in Asian market because there's many different altcoins, which is basically alternative cryptos, much smaller projects, low cap projects with higher risk, but also higher reward. And KuCoin has a wide range of cryptos for that. Binance. Binance is the largest crypto exchange by volume globally. It's run by a man called CZ, who's based in China. Now, the one thing to consider with Binance is that CZ is actually, I believe the case is almost over now, or they're actually trying to resolve it or maybe pardon him. But he is currently in court cases with the US trustee, the US government, because of conducting illegal operations within Binance connected to war, connected to things in the back end governmentally. So Binance isn't the safest place to hold your crypto right now, just because there's a lot of liability there. And this is why I want to do research on what exchange you want to use to buy and sell your cryptos.
Facts, 100%, guys. So put a one in the chat. This is making sense, right? When it comes to different exchanges. Now, I want to also give you guys this insight as well. Something very key right now that is a whole game changer. Exchanges right now are actually applying to become banks, and banks are wanting to become exchanges, right? Right now, literally, Chase Bank is already creating their own type of exchange within their system. And this is something that's very crucial because this goes back to adoption. This goes back to how it's going to be used. And it's the ones that understand what's going on are the ones that get ahead. Because what we're going to be talking about next is actually how to hold your crypto, right? And actually how to own it yourself. But I also want to bring some barriers when it comes to exchanges, is understanding, that we're only using exchanges realistically to buy crypto, to not really hold for a very long time. And the reason why is because these exchanges are what we call centralized. It's kind of like you depositing money to your bank. You do not own the money in your bank. Newsflash, if you didn't know. Same thing in crypto. You do not own the crypto that is in an exchange. So if you're on today's call and you have money on Coinbase, you have money in Kraken, you have money in Binance, you have money in Robinhood, right? I highly recommend to not keep that crypto in there forever, and also understanding what exchanges you're being a part of. I know a lot of people, and there's nothing wrong with it because you might not know, that hold crypto in Robinhood. I don't know if you guys know this, but Robinhood went through a whole law case, a suing case, a whole thing that they went through because they didn't actually own any crypto. The money in that you had on that, they didn't really have the crypto to support it. It was just like a number. Right now, it's a little bit of a change, but you also want to study that. And that's kind of what we're going to be talking about next, is you want to study how to consider and how to get on the right exchange. Like Jean-Luc said, the reason why myself and Jean-Luc, I only use Kraken. And I'm not telling you guys that because for you to do Kraken is do your own research, of course. But the reason why I only do Kraken is because number one, the CEO actually knows crypto, right? While Coinbase, it's a business. The CEO of Coinbase doesn't even understand crypto, to be honest, from what we see him talk about. And then also, it's the understanding that in the last bull run, a lot of you guys weren't here. Now, put a 5 in the chat. This is your first bull run, right? This is your first run in crypto. Like, you were not here back in 2020, 2021, 2019. Okay, amazing. That's basically a lot of people here. So if this is your first bull run, guys, I'm here to tell you guys a little bit. Coinbase, when the bull run was in full effect, and it hasn't even been there yet, to be honest, you guys will see that when it does. Coinbase was one of the first exchanges to shut down for 24 hours and then come back up. It would literally be the first exchange to shut out, shut on, do weird stuff, market manipulation. And even though I don't think Coinbase is going to go anywhere because it's the biggest one, but there is a lot of manipulation on that exchange, in my opinion, just from what I'm seeing. And honestly, even Kraken, I never really saw that. So I'm not telling you guys this to, again, to only use Kraken, but study that. And there's a couple of things here that you want to see and make sure that you understand before kind of doing that. So I know somebody asked, is it possible to transfer holdings from Coinbase to Kraken? Yes, we'll talk about that as well. We can show you guys how to do that. But yeah, definitely there is ways you can go from Coinbase to Kraken, but even better, and we're going to do this here in the next 1 or 2 slides, the best thing to do is to go from exchange to off of exchange. And we'll talk about that in a little bit. But here are a couple of things you want to look at for an exchange. Number one is you want to look at what kind of requirements they have for ID identification, right? There's something called KYC in these exchanges. It's called Know Your Customer. Okay. So every exchange, it goes through a process of doing your ID stuff. It's okay. You guys can do that because it's part of it. It's like opening a bank account, which is very, very important. I'll answer the question in a bit. And then number two is geographic limitations. Like John Luke was talking about, there's some exchanges that you can't even have in certain states. There's certain exchanges that you can't have in certain countries. For example, here in the US, we can't really do anything with Binance, really. There's a lot that we can't do in the US transparently. But there's Coinbase and Kraken and a couple other ones that we are able to do, even like crypto.com. So you just got to know what you're limited to and what you do have access to. Number three is trade limits. Now, for us in the US, unfortunately, we literally can't trade on any exchange. Like we can't trade on Kraken. Coinbase, they have just did something very, very crucial that I think is going to open doors for us here in the US, not going to lie, when it comes to crypto futures. But as of right now, we have a lot of limitations with that. But that is something that will open on when regulation comes. That's something that people don't realize. The only reason why it's not there because of regulation. That's really it. And a couple other things as well. And then also, how can you deposit, withdraw? Those are a couple things that you want to look at. Obviously on an exchanges, you can deposit with your bank, withdraw with your bank, but just understanding these things and asking questions and investigating is very, very key. Also, what things you can actually trade. Not every exchange is going to have every crypto. Okay. When I'll show you guys this at the end, I'm going to show you guys a website called CoinGecko, but I wanted to let you guys know not every exchange has every single thing. Okay. So it's very, very, very important to know what you have access to and what you don't. And then also security. I kind of already talked about that, right? What's more secure than not? What are the some couple of things that have happened in the past that you kind of want to look into? And then also understanding, is the exchange centralized or decentralized? Obviously, the ones we just talked about are centralized. We will talk about some who are decentralized, but also understanding trading fees. Now, I want you guys to know this, and this is like something very key. Exchanges make money off of fees, right? So if you look at some are higher fees and lower fees. Coinbase, I don't know now because I don't really use it too much, but what my experience was not only did it have fees to get in, you had to do like a holding period of like 7 days before you can send it out. So things like this are very important to understand that you got to really look at, right? Because they're very, very, very important. Now, I know there's a question in the chat. What do you think about using Trust Wallet as an exchange? And yep, so Trust Wallet will be something we'll talk about as well. It's kind of like a ledger. That is another option, but we're going to talk about the best ways actually to hold off of exchange. But John Luke, bro, anything you want to touch on here?
Yeah, definitely. So your ID requirements for a centralized exchange are going to be different than a decentralized exchange. So with a decentralized exchange, you don't typically need your passport, need to send in ID and do all of that stuff. So that's one of the biggest differences, because if you want more privacy, going for a decentralized exchange may make more sense. So when it comes to the trading fees as well, I want you to understand that it sometimes depends on the type of trade that you take. So for example, if you're doing a market execution compared to a limit order or compared to a futures trade, you're going to have different fees dependent upon the type of order that you actually place. And each exchange has better fees or worse fees. Deposit and withdrawal methods. As Gil mentioned, sometimes it's a bank account, but guess what? Some exchanges allow you to deposit using a credit card. Some exchanges allow a debit card. Did you know that some exchanges allow you to use crypto? You can fund your exchange with crypto or withdraw in crypto. So there's different variations of how you can actually do that. And others, it's simply a traditional wire. And sometimes it takes 24 hours, sometimes it takes 3 to 5 business days, like traditional wires do. So those are some things that I want you to keep in mind. Decentralized cryptocurrency exchanges and wallets. So as I mentioned, an exchange is where you can buy and sell, and a wallet is where you can actually hold it. Exodus is one of the most popular decentralized exchanges out there, simply because of the wide range of cryptos that it actually has, and also how simple and easy it is to use. Now, when it comes to a ledger, some of you may know, some of you may not know, it's a hardware physical wallet. It's a device. And so it has the highest security because it's actually offline storage of your private keys. The next slide is going to dive into a little bit of what that actually means. So I'm going to save it for that. Now, MetaMask and Phantom. MetaMask is a wallet that is used on the Ethereum blockchain, the ERC20 token blockchain. That's what we typically call it. And so it's just a browser extension. This is something you can download to your Google Chrome, and you can literally have the MetaMask icon on the top right, click that and use that. Now, MetaMask is typically used as a wallet more than an exchange. Okay, that's usually the purpose for it. Phantom is the equivalent of MetaMask, except it's for the Solana blockchain. As I mentioned, the App Store analogy, Solana is just like a Google Play, and Ethereum is just like an App Store. They're two separate blockchains. Therefore, there's two separate wallets that are more suited for each one. So Phantom is for Solana. And so let's say you're purchasing a Solana NFT on Magic Eden, for example, which is a marketplace for Solana NFTs. Well, you can actually store that NFT within your Phantom wallet and keep it there. This is interesting because that means that you can see your portfolio with NFTs, with cryptos and different things, all within this one browser extension. So that's quite interesting.
100%, guys. So what I want to do actually real quick is I want to show you guys a visual of what this actually looks like. So now put a one in the chat if you've never heard of Exodus or Ledger or MetaMask or Phantom. You're like, what is these guys talking about, right? Well, that's why we're literally having this kind of conversation because we want you guys to be equipped. Now, this is the way you guys can hold crypto off of exchange, right? So how you are able to hold it and send it out. Now, what I want to show you guys first is Exodus. So Exodus is literally a website. You go like here, you download this. Now, one thing I want to say very, very crucial, you do not want to have any crypto on your phone. You don't want to have anything. I don't even have exchanges apps on my phone. I don't have Kraken on my phone. I don't have Coinbase on my phone. I don't have nothing on my phone that is crypto because on your phone, it's more likely to be hacked than a laptop or iPad or something that you use kind of at home. So you download this, guys. It's an app, literally. So think about it. It's a cold wallet because you hold it off of exchange. You download the app. Everything is there. Now, Ledger is similar to Exodus. Exodus is free. Ledger, it costs, right? There's a like a $70, $80, the cheapest one. But the only difference with Exodus and Ledger is that Ledger has what we call like the USB thing, right? Now that is all it is just a key to the safe, right? It just adds an extra layer of security. That's it. So my recommendation is this. If you're new into crypto and you don't have a lot in crypto, start with Exodus. There's no point of having a Gucci wallet with like $5 in there, right? There's no point of that. So if you're starting out in crypto, Exodus is free. Highly recommend it. I've never had any issues where you can hold crypto. It's an exchange as well. You can exchange cryptos within it. Just saying. And then Ledger is like a next step further. So if you have more than, you have more than 5 figures, for example, Ledger is a great investment because now you have an extra layer of security as well. And it's just an extra way to protect yourself. So what you're going to be doing is, for example, if you're on Kraken, for example, you're sending your Kraken portfolio assets to Exodus or to Ledger. We'll probably have another call where we'll go more specific. But now, as well as MetaMask and Phantom, These are what we call hot wallets. Okay. Why are they called hot wallets? Because they're on your browser. They're still connected to the internet on your browser. Wow. Exodus and Ledger are not on any browser. They're on your computer. Put a two in the chat. That's making sense. Okay. Very, very important. You can hold your crypto here, but I wouldn't advise to only hold your crypto here. Some cryptos you can't hold on Ledger and Exodus, but you can on these, and that's why we have them here. But also understanding that these are evolving all the time. Phantom, believe it or not, Phantom now you can hold Solana, Ethereum, Bitcoin, uh, and I think there's a couple other ones. But it's wild because Phantom was at once only for Solana, like John Luke was talking about, but now it's evolved. So now it's good to look at these and say, okay, what can I use and what can I not use? Because it's important that you understand that every blockchain is different, right? So you don't want to send Ethereum to Bitcoin, a Bitcoin wallet, right? You want to send Ethereum wallet to an Ethereum wallet, Solana wallet to Solana wallet. And that's very, very crucial because one of the things with security, if you send it to the wrong one, you lose it, right? That's the truth. But it's understanding and getting educated that's going to help you get ahead and have more information than the average person. So, yeah, I just wanted to talk about that as well, which is kind of goes back into here that we were talking about. I'll give you guys a visual with hot wallet and cold wallet. But yeah, John Luke, bro, anything else you want to add with any of this? I think you're muted.
Yeah, just the fact that a hot wallet, your private keys are stored online, and with a cold wallet, they're offline. So private keys, they're simply your 24 word, basically password to have access to your funds in crypto. And so that's why I made the analogy of going to a Starbucks and transferring crypto earlier. Because you're on a public Wi-Fi. And let's be honest, there's some hackers out there who can actually connect to Starbucks's public Wi-Fi whilst you're looking at your investment on in MetaMask or whatever it is, or in Kraken or Coinbase, and now they're trying to manipulate the coding to have access to your funds and move things around. That's why you want to be careful whenever you're on hot wallets compared to cold. But it's key to note that if you don't have significant funds, then it's not necessarily mandatory to have all your funds on a ledger. It depends on the type of individual that you are. Take these two things into consideration. Number one, how much funds do you have within crypto? But number two, what percentage of your net worth is in crypto? But number three, how often do you plan on transferring your crypto? If you plan on transferring your crypto every day, then you might want to keep it on Kraken or Coinbase or something, right? Because it's easier to access and you can move it around. But if you plan on using crypto for a long-term investment and you don't want to transfer it often, and you're like maybe going to do it, I don't know, once or twice a quarter or once a month, then maybe the cold storage wallet is best, keeping it in that hardware ledger or Trezor where it's more protected. So keep these things in mind, what you see on the screen, take a photo of it if you like, but it's the basic differences between the two types of wallets. And as you can see here, we've made a couple of recommendations of what you can, what you maybe should use in 2025. Each wallet, each exchange has pros and cons, which we've already touched on.
Perfect. So now something we want to give you guys is not only, how to hold and where to hold, is also how to diversify your portfolio. But one thing I do want to tell you guys as well, since we just got finished with exchanges, just to be very, very honest with you guys, if you are buying and selling on exchanges, meaning it hitting your bank account, just know that every time it hits your bank account, it's a legal transaction, which is taking profit, which means paying taxes, right? So one thing that I say, my point of view, just to give you guys an extra kind of insight, is I highly recommend, that's why we talked about stable coins and everything. If you're in crypto, I highly recommend to treat it like a long-term perspective, long-term investment, but you're also able to take profits with stable coins. And I recommend to stay in crypto. Just stay in crypto. Meaning if you have BTC and you want to take profit, move it to stable coin. Have it sit there. Wait it to the next run. Do what you got to do, but keep it on crypto as much as possible. And the better, in my opinion, off of exchange, the easier, because the less it can be tracked. And that's the whole point of crypto, guys, is to not be tracked. That's like the whole thing, If not, we would just be, on doing stocks, which there's nothing wrong with that. But it's important to understand that you want to stay in crypto. right? And that's why there's so many avenues and so many things to do. And guess what? It's gonna be a lot easier to stay in crypto because now we even have a lot of things that you can, transfer, and there's crypto cards that you can have and spend crypto if you wanted to and still keep it in there. So it's kind of like a different lot of things are coming within exactly Web3 that is going to be a lot easier to kind of just like transfer. And that's the whole point of the blockchain ecosystem, is to be its own ecosystem within the traditional ecosystem. But it's also very key how you diversify your portfolio. Now, this is an example that we like to give here on how to diversify your portfolio. There's a lot of different ways to do this. Some people are more risk than others, but also understanding that if you're looking at this in a long-term perspective, you want to make sure that you're securing the right assets. Right? A lot of us, I know we've seen meme coins. I know we've seen a lot of things that have 40, 50, 100x. I get it. But at the same time, you got to ask yourself, do you want to be a part of something that has real utility, that has real access, that's going to be here in the next 5, 10, 15 years? Or do you want to be a part of an asset that might go up crazy? You might not take profit at the right time, and then it ends up going down, and then you end up making no money, right? That's a perspective I had in the first bull run. I was like everybody, I just want to make a lot of money. And yes, there's money to be made in these markets, but I'm here to let you guys know that it's how you diversify your portfolio that helps you last in the game. Now, there's two types of people that I always like to say. They're the conservative, and then there's the aggressive. It just depends on who you are and what you want to do. Now, for myself, transparently, I'm a little bit more conservative because I don't want to really worry about having to check things and have to be every single day. And we already do that with trading, right? But with crypto, I have a long term perspective. And I understand that the more I diversify my portfolio, the better. So the first thing you can look at is main cap coins. Now, this is anything that's over $1 billion. This is basically the big ones that we talk about: the Bitcoins, the Ethereums, the Solanas, the Chainlinks. The biggest ones that we kind of look at over $1 billion market cap. This is where we recommend to hold anywhere from 65 to 90%, depending on where you're at as a conservative and aggressive. Now, mid cap coins is anything between 100 million and a billion market cap. I'm going to show you guys a website where you guys can look at this, but this is where you want to have around 25 to 35% of your portfolio, what we call mid cap coins. This can be Flow. This can be Compound, right? This can be a couple other ones that we've been able to see. And then low cap coins is what we recommend to have 5 to 10%. It's up to you. I think more than 10% is a little bit wild in my opinion. But obviously, if you have a small portfolio and you're not really taking it serious, I get it. You could. But if you're somebody that's really looking at this as a legitimate investor and you're really putting your life money, like you're part of your check, that's something I always tell people. If you're going to be putting 10%, 20%, 30% of your check from your job into crypto, I wouldn't be much in low cap coins, right? Because then at that point, you might as well just put it in savings, right? Because it'll be more secure than you trying to think that your $100 is going to go parabolic unless you don't need it. But I know for a lot of us, 10, 20, 30% of our check is a lot of money. So I highly recommend to protect that because it might not give you the 1000x that everybody on social media is showing, but I can guarantee you it will grow over time. And that's a perspective that you want to have. So look, man, anything you want to touch on here?
Yeah, depending on if you're aggressive, moderate, or conservative, it's going to depend on the level of percentage that you have for each of these categories. So that's important to keep in mind. And so one of the mistakes that I've seen a lot of people make is that they start out their journey too aggressive, and then on their second bull run or their second time in the market, 2, 3 years later, they then switch to the more conservative side. But they learn through that through their own mistake. So you have to not just look at your crypto investment standpoint, but you have to look at your whole financial standpoint and go, do I understand the utility of this project? Do I understand what value this actually adds to the market? Because the more you get educated on it, the more confident you will be to be more invested in it. And that's why, for me personally, not only am I heavily invested, but I have a slightly more aggressive side. Why? Because I understand what a Polkadot does for the ecosystem, how it could be used. I understand that XRP is being used by certain banks already. Therefore, follow where the big money moves and you'll get their results. So that's going to determine also the type of investment you are within the space.
Yeah, 100%. And last thing I want to do before we end today's call is I want to show you guys a website that y'all can actually use. Now, put a one in the chat. You guys have ever used CoinGecko? Put a two in the chat. You've never have. Now, CoinGecko is something that you guys can use. It's kind of like a Yahoo Finance for traditionals in the stock market. Is where you can see the numbers, right? You can see, how much money is in each crypto, right? So market cap is how much money is in that crypto. So, for example, Bitcoin has $2 trillion, which is wild because the whole market is 3.4, right? So there's more in Bitcoin than anything else. But as you start to see, right, all of these over a billion, right? 10 billion, 8 billion, right? So technically, all of these are main cap coins. But I'm also here to let you guys know just because it's a main cap coin doesn't mean it's a good coin. Doesn't mean that because there's a lot of things here that don't really do anything, right? That they just have money in, which is hype. But as you guys know, even more here in Powerhouse than anything, we're not about hype. We're about real stuff, right? Real information, real education, and real utility, which is super, super important because a lot of people think, oh, it's got over a billion. It's a main cap coin. I'm in. Not really. You want to really investigate what it's doing, it's being used. Is there real adoption in there? A couple of things that we'll talk about as we go on. But y'all can use this, guys. Literally, you can go on here, look at different categories. Look at the different type of cryptos that you guys want to be invested in, and looking into the numbers. It's very, very key. As John Luke said, we are going to be having, every single week, we're going to be having these calls, like we know. But also, there's going to be different topics. So today was a little bit more basic, but it's to really give you guys a foundation. Once you have a foundation, then you can grow from there. Because I'm gonna be honest, if you knew the right cryptos and you knew the right anything, but you only have it on exchange and the exchange, something happens to it, then all your work goes to zero. It's for nothing. We saw that with FTX. People had crypto on FTX. Look what happened. It was a very unfortunate situation. So the foundation is super crucial in knowing how to manage and use that. So we're saying that every single Saturday, guys, we're having these calls. If you're from obviously within the powerhouse, we're going to be sending you guys this. If you're from our Instagram channel, we'll have these sent as well. But just make sure to stay tuned because we're only going to be elevating these, giving more information, and also use us. If you're in the powerhouse chats, ask questions in the chats. We're here to help you guys. That's the whole purpose. If we don't know the answer, we'll find the answer. But we have a lot of experience in this. And with saying that, John Luper, I appreciate you for running this with me. I'll let you close it out if you want to end it with anything else, and we'll go from there.
Yeah, 100%. Just summarizing really the last slide is, low cap projects, typically you're going to see a higher volatility, a higher potential ROI, return on investment, but also a higher level of risk. With the main cap coins, you're going to see lower volatility, lower ROI, return on investment over time, but less risk. So that's the concept that I want you to keep in mind. We appreciate all of you hopping on the call. As Gil mentioned, different topics, different weeks. We're starting out basic, but we look forward to seeing you on the call next week, Saturday. And please go ahead and join that Instagram channel because we're going to be dropping some value as well as the Zoom links on that Instagram channel. So you can click that right there or get it from the Powerhouse group chats. So appreciate you all. Go get us on Instagram and we will see you guys on the next call next week.